Hey everyone, Jeff Dorman, Chief Investment Officer of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital assets market. Joined this week by my colleague, Joey Reinberg. How are you, sir?
Good. Excited to talk about Plasma and perp DEXs.
Did you say Plasma and perp DEXs, or did you say playoff baseball? Go Guardians. Oh, you said Plasma and XPL, or perps. Great. Okay, well, before we get into that stuff, look, it was an interesting week in the markets. We're actually a couple of weeks now in a row of really a lot of news, more positive news than negative news, but prices not really reflecting that. This last week was another one where a lot of pretty interesting things going on, and yet we had one of the biggest futures liquidations ever. Almost $4 billion of futures positions were liquidated last week, which is the highest weekly figure of 2025. And more interestingly, all the other ones, at least there was some real reason for it, right? It was either driven by concerns of rate hikes or geopolitical tensions or tariffs. I don't really know what drove last week, other than the fact that sometimes markets go wrong and go down. But again, there was really positive news, right? You got Tether, the world's largest stablecoin issuer, reportedly seeking to raise 15 to 20 billion in a private placement offering, which would put it at a $500 billion valuation, in line with other private companies like OpenAI and SpaceX. I think, while some are maybe pointing to Circle's $30 billion market cap as a comp, these are really different businesses. Tether has much higher operating margins, and Circle has to pay almost all of its revenue out to BlackRock and Coinbase for distribution agreements, and has a much larger business development team than Tether does. But still, stablecoins are hot. Stablecoins have been. Every time you can get anything in the stablecoin market, people are going to look at it. So I think Tether equity certainly going to be appealing to a lot of people. And speaking of Tether and stablecoins, Plasma, the long-awaited launch of its XPL token, came out last week. Even though the token was issued at an ICO price of 5 cents, it shot up to 70 cents in pre-markets futures, and then ultimately as high as $1.60 before retreating towards the end of last week. So with that in mind, Joey, I know you've spent a lot of time on Plasma and XPL. Obviously, our desk and our company spends a lot of time looking at stablecoins. What's the bull case for Plasma, knowing that obviously being tied to Bitfinex and Tether is going to be viewed as a good thing, and being a specific stablecoin chain, obviously a good thing, but also we've seen hundreds of layer ones flop in the last 7 years.
Well, I think there's a couple bull cases. The first is, in general, the growth of stablecoins and this becoming like a $2 trillion asset in the next couple of years. And then additionally, I think that one of the major things is this free ability, or the ability to transfer Tether for free on Plasma. So if you are in a third world country and you are looking to send payments or remittances, and you're able to do it on Plasma for free, that's a huge advantage over doing it on Ethereum or Tron, where you're going to pay anywhere from $1 to a couple of dollars for a transaction. Additionally, they're launching a neobank product, which is basically a credit or debit card where you can then pay using Tether at any store across 150 different countries. And additionally, they'll have the on and off ramp for these for Tether in all of these different countries. So basically what you do is you deposit Tether in, you are earning 10% on that Tether while it's sitting there, as well as you get 4% cash back in XPL tokens on any sort of payment you do with this credit card. So I think this is going to be super attractive to people across the world, as well as they already have 75,000 signups for this product, which is launching sometime in the next couple of months.
But how should somebody look at this? I mean, again, we've got the full gamut of valuations in L1 world, right? You've got your Ethereum at 500 billion, and your Solana at 100 billion. You can't really make sense of those valuations if you look at them in any sort of financial way, right? It's not because of the fees generated. It's not because of the utility or the usefulness of the token. It's mostly just around excitement about the current and potential future use cases. Then you've got completely dormant chains that do absolutely nothing, that have somewhere between 10 and $100 billion valuations, just because the venture world and the retail community loves these things. Then you've got ones that have just been completely defunct and have gone basically completely away, and most of these still have a $500 million to $1 billion valuation. Then you get something like Tron, which has reinvented itself as basically being just a stablecoin chain, somewhere around 30 billion. Like, how should an investor even just start to comp or look at a new chain like this that's basically a week old, and all metrics are volatile and brand new at this early of a juncture?
Yeah, I think for Plasma, you do have to have a little bit of a longer term outlook on what this can actually become. But the best metric to kind of understand what it should be trading at today is by looking at basically the stablecoin supply across different chains and the market cap across different chains and coming up with a ratio of the stablecoin supply to market cap to then back into a fair valuation based on the stablecoin supply of Plasma. So the stablecoin supply basically started at 2.5 billion and has grown to 6 billion today in a couple of days. So that basically puts the fair valuation, if you comp it to Tron, at around a $1.2 dollar price for XPL, or at around a 2.1 billion market cap. And the kind of bull case scenario is you reach around $3 and a 5.2 billion dollar market cap if you comp it to the averages. And the extreme bull case is if you comp it to Ethereum, and that puts it kind of in an unreasonable number around like $5.
Okay, so basically you're just looking at a pure play stablecoin chain like Tron, looking at the amount of stables that are on that platform, and then doing a pure market cap to stablecoin AUM ratio to come up with those levels. So if you think that Plasma becomes the new Tron, or if you think it becomes even bigger and broader into something more like an Ethereum or Solana, which obviously are the other two chains that have a lot going on with stablecoins, then you can come up with a pretty big bull case for XPL. What about the bear case? Like, how does this go wrong? What kind of incentives are in play right now? Like, what makes this thing just sort of, in 2 months, nobody cares about it?
Yeah, so on launch, they partnered with Aave, Athena, Pendle, Uniswap. They're basically having every DeFi protocol there from day one. But in order to attract TVL, they're basically paying out super high incentives in XPL tokens. So they're basically incentivizing TVL and stablecoins to come onto the chain with super high DeFi yields. So as those dry up, the TVL could potentially leave the chain, or they may not attract as much DeFi growth as another chain that's able to offer incentives. But I do think the bull case of the neobank being a utilized product around the world for payments is really the ultimate bull case. And being a stablecoin first neobank they're kind of like one of the first real products to do this with their own chain. You have like EtherFi doing this, but it's on Ethereum and is relatively expensive then to do something like this. Plasma is like the first one with a low cost chain to kind of shoot for something like this.
Okay, we'll see what happens and how this plays out over the next couple of weeks as we see TVL move around, as well as other incentives and other partnerships. Moving on here, I think pretty much anybody in crypto has been paying a lot of attention to the perp DEX wars. We've been talking about Hyperliquid for a long time, heating up in the last few months and certainly in the last week. One thing, and I encourage people to actually go into our blog on our website, that's Our Two Satoshis on the Arca blog. We've talked about for years about how decentralized spot exchanges have been steadily eating some of the volume of centralized exchanges. If you look at a graph courtesy of the block, you go back to 2019, 2020, and spot DEXs were making up less than 1% of the total market. And it's been basically up and to the right ever since, approaching 20% now of total volumes on the spot side. Up until recently, if you looked at the exact same graph on the perp DEXs, meaning instead of trading spots, they're trading perpetual futures, it looked like it was 2 years behind, right? Basically around 1% to 2% of total volume up until, call it, end of last year when Hyperliquid emerged, and it steadily started going up and to the right, and now just exploding, approaching almost 20% of total volumes as well. Hyperliquid wasn't the first, obviously, of DYDX and Synthetics and others, but Hyperliquid was the first to start doing comparable volume to what we were seeing at some of the centralized exchanges, and certainly making an insane amount of money with $1 billion of run rate revenue. But up until a couple of weeks ago, there really wasn't a lot of competition for Hyperliquid. And then all of a sudden, we see these wars come out. So I've always asked, first and foremost, do we think that this sector makes sense? And I think perpetual futures and decentralized exchanges make a ton of sense. And then the question becomes, well, what are you supposed to invest in this space, right? Do you just play a game of hot potato to the next hottest thing, or do you make a long-term view on who's actually going to be the winner? What are you seeing? What happened? How did Hyperliquid go from kind of the sole player to all of a sudden 5 to 10 perp DEXs in the last week and a half?
Yeah, so a lot of these perp DEXs actually existed before the launch of the Astra token, but most of it was kind of volume to get an airdrop or volume to get an allocation to the token. And then when the Astra token launched last week, CZ basically tweeted about it, was an early backer of it, and because of that, people basically piled on to this initial like CZ trade.
CZ,
And
for those who don't know, being the former founder and CEO of Binance, and obviously still a pretty big player in everything involving crypto trading.
yeah, so for the first couple days after launch, the volumes did better than Hyperliquid, and now are doing significantly more volume than Hyperliquid. But I think what's more important is you have to look at OI, or open interest, and TVL, or basically collateral that's on the chain. And Astra has significantly less open interest and collateral on the chain than Hyperliquid does, basically meaning that people are either wash trading or using insanely high leverage to basically increase the volume numbers, which I think both are the case in the Astra situation, because they offer 1,000x leverage perps. That's one of their main products that's actually happening on chain. So of course, because of that, when they're offering 1,000x leverage, the volumes are going to be higher. But you're also additionally seeing other products come to market, Lighter being the other one that's been doing really well and kind of comparable to Hyperliquid. You have EdgeX, Apex, Jupiter as a perp product. You're seeing additionally a bunch of others come to market in the last couple of weeks, kind of on the heels of this big Astra launch. But I still think Hyperliquid is the big winner in this space. They're dominating the spot trading market, especially with the XPL launch. They have HIP3 and permissionless perps coming to market soon. They offer builder codes where anyone can offer a front end and tap into their liquidity. And then as well as they have the whole EVM ecosystem that's finally starting to emerge, where you can bring assets across a perp exchange to be able to use them in DeFi. And I still think all of these bullish scenarios for Hyperliquid are much greater than any other chain. And this is kind of like a short-term attention grab from Astra that's not long-term sustainable.
Yeah, I mean, just like we said earlier about Plasma and having the backing of Tether, obviously Astra having an implicit backing by CZ and potentially Binance is a big thing. I think the thing that I focus more on is, look, again, there's low barriers to entry in general in crypto. It's easy to start products. Most of them kind of come and go without much sustainability. I mean, we saw the same thing a couple months ago where Pump.Fun had 90% of the market share in meme coin launchpads, and all of a sudden Bonk.Fun for a week had 90% market share, and then Bonk.Fun basically went away, and Pump.Fun resumed the 90% market share. I don't really know who's going to ultimately win here, but what I think is more interesting is that volumes on Hyperliquid aren't really going down. It's just new volumes going up on these new competitors, meaning that this is not necessarily stealing from an existing pot of perpetual futures traders. It's actually adding to the pie, which is why, again, when you look at the graph in our blog and you see the up and to the right nature of just perpetual futures on decentralized exchanges versus centralized exchanges, it's clear that this is just an area of the market that people want to trade, they want to be involved in. And it's great to see that kind of a volume increase. Again, to your point, Astra volumes don't look super organic. It's hard to drive that much real volume on such little open interest and market maker TVL, meaning, you need this. It doesn't look sustainable in its current form. But again, it's still good that it's not just sucking the life out of Hyperliquid's users into another platform. It's actually growing with new users and ultimately growing the entire space. So I've always said that, wars are good for investors because people spend money to win wars. And I don't think that that's any different here. But again, it is a sector that's worth watching. Just like we've seen, Uniswap and Sushi, and ultimately Uniswap win, and then Aerodrome and others come in. The same thing is true here in the perp wars, right? It's not going to be one winner. You're probably going to have multiple winners, and you're going to have to really pay attention to the data to show where the volumes are, and which tokens are going to ultimately benefit the most from this. So it'll be interesting to see. Obviously, this is something that we need to keep a close eye on over the next several weeks and months. But certainly, in my opinion, something that's incredibly bullish and no real way to think about that otherwise.
Agreed. And yeah, you're going to see a flurry of new TGEs from this space come out, and it's one of the better sectors that are actually earning real revenues, and you can put a real valuation on. So I think it's something we'll be investing in across the board.
Great. All right. Well, that's it for this week, Joey. Thanks for joining us, and everyone. That's Our Two Satoshis. Please read the blog if you want to see more charts, and we'll be back again next week. Thanks, everybody.